Got Danny Keating of New Vision Resources, Mike Paterson from RCF, and Andrew Brown from B2 Gold Corp. Gentlemen, please join me. No particular order, however you like. So, thanks for joining me, gentlemen, up here. Exploration, where do we start? I mean, we know that it's a difficult market for earlier stage projects. We know that there's a huge requirement for resources globally, for resource replenishment. What's your sort of take on where junior explorers stand at the moment? How difficult is their journey at the moment in these current market conditions? Andrew, why don't we start with your perspective on that?
Is on here? Okay.
Yeah.
The role of the junior in resource replenishment, extremely important. We were discussing a little bit earlier. Juniors have fed directly into our success as a company via acquisitions. Certainly some of the teams represented here today have been a big part of some of B2 Gold's major acquisitions in West Africa and Southern Africa. So from our standpoint, although B2 invests a lot in its own exploration, and we always have, the reality is that we get exposure to more opportunities if there's a well-financed, motivated team of junior exploration companies out there that are generating projects, bringing more opportunities to the table, more than we're able to do internally. So yeah, having them alive and well is a critical part to the industry overall, not just to the gold sector, but to the industry in general.
Yeah, but you're doing quite a lot at, keeping these juniors in a healthy condition, in the sense that you're acquiring projects, or investing with projects, and when you do, you like to put your money into the ground rather than into the equities of the company, which is quite important.
That's right. The traditional structure is, apart from an excellent standalone asset for Coal Deposit in Mali, for example, was an excellent asset in good shape when we acquired Papillon. That came along with a lot of exploration upside, which I think we capitalized on nicely. We do spend a lot on our own exploration. But as you go farther down the ladder in terms of earlier stage grassroots programs, you're not talking about an acquisition out of the gate. You're often talking about an earn-in type structure, which is our preference: money in the ground versus investing in the company per se. I have noticed as we look for opportunities, as we talk to some of the companies present here today, that there is a growing number of management teams that say, we want equity, an equity type deal, not necessarily an earn-in on the project, but strategic investment. Which is not B2's typical mode of operation for new exploration opportunities. We like to put our money in the ground. So to that extent, there's probably an alignment between our team and their team. You want to put money in the ground. Whether that sort of prohibits or limits some of the deals we get into, it's just a business strategy that will have to work its way through.
Yep.
We do continue to put a big focus on exploration, as I was saying earlier. This year, worldwide, we probably have in the order of $15 million directed towards pure grassroots exploration. A lot of that is presently unallocated, in that some of it could easily be deployed in, say, year one of a new deal with a junior that's got a project that they do want a partner to earn in on.
Yep. Okay. And how much time do you sort of split between looking at existing juniors, working with them, or going and doing your own geological research yourself for completely greenfield stuff?
A lot of our exploration is in-house. $50 million budget for exploration worldwide this year. A lot of it's brownfields, depending what your definition of that is. But that always brings you. I think it seems. Sorry. Switch.
Yeah.
Sorry, is that better?
Yeah.
Let's go a little closer. You're always in close proximity to juniors that are right on your doorstep, sort of literally. So as you progress with a big regional program like we are in West Africa or in Namibia, you are aware of the activities of the juniors around you, and at some point you think, what they have is starting to look pretty good. What's the way forward there? Are they interested in dealing with us? Are they going it alone? Are they looking for an earning partner or a strategic investor? That it comes up frequently in the exploration process.
Yeah. Okay, good. Mike, a couple of years ago, you came and spoke for us about RCF's Opportunities Fund. How's things been going since then, and what's your sort of take on the earlier stage exploration scene now, financing juniors at that level?
Yep. So it's been going well. Obviously, I can't talk about too many of the details with the portfolio, but
Sure.
A piece of our strategy is exploration. What we're focusing on and what we'd like to look for is sort of getting away from the one-trick pony type companies. So looking for investment into really teams rather than assets. So we want to find a good team that has that that foresight, strategic thinking that exploration is inherently risky. It's going to fail more times than not. So obviously we'd like to hedge that bet by thinking that we're good technical folks and what have you. But at the end of the day, it is a risky investment. So if a team goes and puts one drill hole into the ground and it doesn't supply the results that they wanted, we want to be able to have a team that is able to pivot into something else and either whether that's a different asset or just hit the pause button and rethink what they're doing. I think we've seen over the years too often a team that thinks they have a good idea has a single asset, says we need to raise a few $1 million. They go spend that few $1 million, epic failure in the ground, and the company sort of goes by the wayside. A lot of retail people got involved in the thing. A lot of institutional money got involved, and it sort of disappears. And what do you know? That same team's reemerged with an entirely new thing. In this market, the last thing we need is another junior gold explorer. Which is a different conversation, but investing in the teams that are able to increase their own odds, more rolls of the dice at the end of the day.
Yep. So de-risking the project through the managerial experience. Any other sort of like key investment triggers that go with that? The geology's got to be there.
Yeah, that's right. So I'm a mining engineer by default, or by experience and education. So I'm not a geologist, but ironically, I've done the majority of our exploration investments for the fund because I like looking for teams. Good teams. I like, the sort of big picture thinking, the strategic thinking, the foresight, that sort of stuff. I think the thing that companies come to you with is, well, we have a bit of experience and some good geology. Well, hopefully every company has that, right? Everybody in this room, everybody outside has some kind of experience. So at the end of the day, that's just not really good enough anymore. It's only going to get you so far. That's for us where we look at some of these other attributes that companies can bring to the table to set them apart and make them a bit more unique than the next person.
What specifically? Just the management team's proven track record, or any other elements?
Yeah, more dollars into the ground. It's easy to say, right? But I mean that is a massive piece. We were talking earlier about privates versus publics. In an ideal world, probably from an early stage, every company would be private because then the CEO is not having to constantly worry about the share price every day and spend a ton of money in PR and IR and that sort of thing. But that's the world we live in. So companies that are able to more efficiently spend those dollars to dedicate more into the ground, it's only going to satisfy us. It's only hopefully eventually going to satisfy the market. But what that means is that you need to have a retail shareholding that's able to also have that foresight to go along with the company. And that if they put out a drill result that's a few meters too short and a few tenths of a gram too low, that the share price doesn't come off a cliff, which is what you usually find. So, hopefully people can buy into that longer term view and the big picture.
Yep. Danny, yeah.
If I can follow up on Mike's point, because it's always good to hear what the money guy
and just tell us a bit about New Vision Resources as well.
I'll jump to that. And New Vision is a bit of that. We're not a gold junior. But I think the point about management has become so much more prevalent in the sense of, because the business model has changed. So historically, if you go back, you used to do your exploration, discovery, do a bit of a study, and then you look for the takeout. And a major, or through the boom, maybe a Chinese company came in, bought you out. And so the level of complexity you dealt with was exploration and just close to your mine site. And I think that's what's changed. Because we don't have that magic moment where post-discovery or with a bit of work you have this buyout, that you now have to plan, and particularly I focus on the bulk side, copper-based metals before and now more recently in bauxite, is you now have to manage a footprint that can extend 100 kilometers, or if you have a rail line, up to 1,000 kilometers. I have to now know, as a mining engineer, I now have to understand how to build not only roads and bridges, but ports. I have to understand tidal impacts and bathymetric surveys and shipping. And if you're not in a LME quoted commodity, I've now got to understand a complexity in a niche market of what flake I have in a graphite or what contaminants I have in bauxite. I have to understand the refinery process to the nth degree so I can talk to my customer. And that's before then I come back and deal with government, the rising environmental, social issues that are coming up. And I'm just a humble mining engineer who just wanted to, blow up some ground that the geologists found. So I think that level of complexity has risen, particularly in probably the last 10 years, because we've moved out of this model where you could just pump and dump sort of thing and just get rid of it. You really do have to take these things all the way down the road. Mike's group is one where he's at the front end of trying to find new stuff, but RCF is investing down the back end. But what they want to see is complete projects. They want to see the DFS, they want to see all the engineering, they want to see all the design. And so we used to pass this on to the majors, because the majors used to build and do all that work. But now more and more, the juniors have to become the intermediate, we have to develop. And so that skill set is very different. And I think that's the change that Mike is probably starting to, and the industry is recognizing, is that the management team that you have to focus on is like, can you manage the level of complexity now that you're looking at? Even gold projects, and because the footprint can be smaller, but there are so many other factors that come in. And you see a nice small footprint of a gold project can make life a little easier in comparison to a bulk. But that complexity is there. And I think even with good geology, if you don't have a management team that can manage that complexity, the geology won't save them. The company will go bust and someone else will pick up the asset because it's good. But invariably, again, we're also in a world that we've done a lot of exploration. So I'm not saying there aren't good assets out there or the best, but a lot of the best have been mined. We're in another tier, and you've got to make the next tier of assets and investigate those and look for new ones. So it does mean that management is maybe, you can't just rely on that resource. The management team becomes so much more important, I think, now than maybe it has been in the past.
Mm-hmm. Any other thoughts on the complexity of the role at all? Yeah. Any other thoughts on how more complex it's becoming for the geology? Anyone? Yeah. Any other thoughts on the complexity, how complex it's becoming for miners on the exploration?
You've touched on some great points there. Yeah, the management team must be critical because they've got to be prepared to go the distance, right? And oftentimes now you'll see a project come to resource stage and perhaps underwhelm the market, and then they're sort of back, puts them back on their heels where they were a few months back, and there is no imminent takeover. So what is the next step? Which is sometimes where they become in interaction with larger companies that are saying, okay, well now are you ready to sort of take a hand, or do you want to start talking about this asset? But that the skill of the management team does factor into a lot of aspects, and going back the origins of the project to jurisdiction selection, being able to navigate policy, assess the potential of the region, get the financing secured. It's a timeline that I think probably necessitates you got a decent and experienced management team. This is probably why you see certain groups of resource professionals resurface in a new guise, after an initial success, sold off a company. You see, same good group of guys reconfigured with a new asset, new jurisdiction, or the same jurisdiction, redeploying that experience they gained.
Yeah, that leads me on to my other point around, what are the sort of beyond the management team on the environmental side, or the environment, or the jurisdiction, what are the ingredients that you think are sort of triggers for you to say, okay, this is going to be a successful project, this is an interesting project, I like the look of that?
So, as Danny mentioned, governance, compliance, everything other than the mining and the rocks, and this is all becoming far more important, as everybody here knows. Internally, on our technical team, we have a ESG officer who's responsible for looking at that side of every one of our investments. But so it's something that we take seriously. I think the industry's taking it more seriously. From an investor standpoint, when our investors pick up on mining news, it's unfortunately a lot of times what's groups like Forbes reporting on and Bloomberg and the sort of general news headlines, it's probably something related to some catastrophic ESG related failure. It's the what we saw with the Semifo caravan. It's the tailings dams in Brazil. It's that type of stuff. So it does make big headlines, and these are horrific incidents that the industry definitely needs to figure out a way to address. So you can't play it down at all, and of course that then rolls into the country. You're looking at the jurisdictions. For us, we're seeing good value in safer jurisdictions. So naturally, if that's the case, then it's probably hard to make a case to put your dollars into a higher risk jurisdiction. But conversely, the more mature an economy is, then in theory, the less likelihood for a new discovery or something really special is. So you're going to have to go to these jurisdictions and take some of that risk.
So where in Africa, for instance, are you looking? West Africa, good for at the moment, or what's that sweet spot of risk to?
Sure. So as an organization, over the 20 plus years we've been around, we've invested quite a lot in Africa and over a variety of countries. For the Opportunities Fund, we've started deploying a bit of capital into Africa. We are looking at countries like Namibia, good infrastructure, seemingly mature mining regulatory framework. Every country, I think, U.S. obviously included, has improvements that can be made, but I think it's looking less at the assets in the ground. It's probably looking at the governance side and the legal framework. How easy is it ultimately going to be for this management team that we're backing to do business in this country? And maybe you end up overlooking some really good assets because of that. But
I just wanted to pick up on a point that Mike raised there in terms of the majors. And I think he's right that I Googled a few of the things just coming in here on the majors. And if you do that, you do get if you Google Vale, you get all about the disasters in Brazil. BHP's the same. Rio Tinto just got done for something in Australia about gouging suppliers or something. And when you go through our majors, there is often bad news. I'm not just blaming them. I'm just saying this, that we do have a PR issue there that must filter down to the rest of the industry. It certainly does. So it doesn't create the right environment. And again, if you Google Glencore, you end up with fraud office news articles coming to the top. So it's not ideal when people look at the top end of the market and see that activity. And I think then added to that is, even if you move past that, and I don't call it PR, these are serious problems, and we know why they happen, but if you then look and sort of say, well, are the majors investing? So if I'm someone investing in the junior market, what are the lead guys doing? Because they know this business the best, apparently. And if you look, and most of the majors spent the last sort of 5-6 years recovering from the disasters of the acquisitions and the mess they made before, and they've been doing, around their mine sites, they've been doing lots of exploration, but very little investment into greenfields and new exploration. So there's also been, if I'm an institution and I'm looking and saying, well, if these guys know best, they know the business best, they're not putting money down into this business, to these juniors, why are we? So I'm encouraged to hear, yesterday I think the panel discussed that the majors look like they're in the M&A phase and they're starting the process of looking into investing further. I know the mid-tier is certainly doing that. So it's good that maybe at least the top end of the business is now saying we want to invest in the exploration game, and maybe that'll give people a bit more confidence to come out into it. So I think that would help. At the same time, obviously, we've also all got to hold our breaths and make sure that hopefully this time that the majors act in a way that adds more credibility to the industry and doesn't go off and do any more crazy deals and stuff that sets us back yet again. Because there's not much we can do about it, but we do stand in the reflection of what they do and how they act. And they are the ones that will carry the news flow. And I think the other aspect that we, from an industry point of view, that we don't ignore, but it's sort of silent here, is the impact of China, and not as a customer, but as the SOEs that are out exploring and operating in the countries where we all operate. And it's a bit of one of those, and I don't have an answer for it, but it's almost like I feel an existential threat in the sense of their business model and our business model is so different, and I don't know how we continue to compete. If we go out and we find a deposit, and we raise some money and we drill, and then we go and find some more money on the results, and we do our studies, and it takes years and it's a lot of money, and it's a very inefficient way of doing it. We all know that if I'm going to get this mine to a DFS or construction, if you gave me the money at the beginning, I'd run through it, I'd do it a lot more efficiently, it'd be optimized from day one. But we don't do it that way. We do all these iterations. Chinese SOE arrives, it's backed by money, cheap money. It sort of starts out, gets a deposit, and, well, we'll trial. So we'll put a road in. Chinese company will come and put a road in. Or we need a harbor, so we'll get the best harbor company in the world in China Harbor to come and build a harbor. And then we'll get some trucks, and there'll be Chinese trucks. And so they have a scale and a way of operating that is so difficult for us to compete with. And I think that's the bit that if we look at exploration and the development, we're only one half of the story. There is a lot going on. It's just, it's state-owned, and it's, I don't say under the radar, but it's there. And the other element where we're not able to compete is if environmental, social, governance is also important, and it is, but I'm not sure it's as shared with other participants in these countries. So we're doing the right things, but it ends up being a disadvantage to operate in this way, in these environments where your competitors already have an advantage on you in the way they operate, and then also maybe have a slightly lower ESG threshold. So I don't have a solution for it, but I think that's part of what is also exacerbating the trouble we're seeing now, and the difficulties we're experiencing as an industry, is there's that other element that's coming in. And maybe that's also keeping maybe other investors away a bit. Once the majors are moving in the right direction and we can see a way of managing and competing for assets in countries and development against SOEs and those sort of organizations, then maybe that also will help us. But I don't have the answer to how we face that challenge, to be honest. Maybe Andy does.
Yeah.
It's a distinctly non-technical question. There is an element of lead by example, and I would, I don't want to make this about it's not a marketing mission on my part, but part of it, I guess, could be attributed to leading by example. You make yourself a partner of choice in the jurisdictions you're working with. If you're one of those companies that are moving into new areas, I'll cite our example. The work we do in Namibia has done a lot to generate goodwill in the country, and I think it would sort of open doors to access new opportunities for us, whether that is in a competitive environment with somebody coming in with different business standards that our own. I'll leave it at that. As I guess the only element you have there is to sort of lead by example and make your company a partner of choice. Now, coming back to the juniors, I don't know that they have the resources to do that, other than to sort of. Other than to just sort of endure and sort of set best practices, but stepping back from some of the more complex issues you guys have been talking about, there's a lot of excitement about that first mover status, right? Who doesn't want to be the first mover in a new jurisdiction? Easier for bigger companies, obviously, because you can sort of weather the various. You can wait things out. You've got the financial resources to endure changes in policy, which is critical to your success. There is knowing what the rules you're going into are. What are the regulations around mining in that particular new jurisdiction? Are they going to be the same when you get halfway through your project? Difficult for a company of any size to deal with if things suddenly change, but certainly fatal for a junior that is financed for the initial stages only. As a potential acquirer of new projects or companies with great assets, there is a really attractive quality to people that are going into areas where the geology says this is fantastic. Others fear to tread. Those opportunities are few and far between, though, for the reasons that have been stated. There's a whole lot of other factors that go there, that come into play before their respective budgets run out.
Yep. What's on the edge of risky in terms of jurisdictions then for B2 Gold, in terms of where you would go and perhaps where you wouldn't go? Are you able to talk about that?
Geographically, the company and the predecessor company, Bema Gold, has a long history of geographically diverse opportunities. Russia, Chile, West Africa. It's, as I said, as long as you can clearly identify the policy, there's good transparency in the mining code. You can mine profitably whatever asset you're pursuing. You know that you're comfortable with the scope of the regulations you're working under. Sometimes challenging geography has the biggest rewards for you. So within reason and without too much in the way of specifics, geography is not an issue so long as we can satisfy the conditions to build and operate a mine profitably.
Okay. I want to come back to the sort of public versus private discussion, and thinking about the plethora of issues and challenges that you guys have already explained for the earlier stage junior at the moment. It's sounding to me like going private would sort of help you be a bit more fluid and operate with a little bit more ease than perhaps as a listed entity. Do you agree with that, or do you think there's benefits in either? Do you prefer private companies, obviously, from an acquisition point of view?
So it's a two-sided coin. It's never as simple as just saying companies should be private or public. In theory, from an investment fund management standpoint, if you have a few private names in your portfolio, that should reduce the overall volatility for the portfolio, especially on the junior side. However, the reason people invest in juniors and in exploration is because of the volatility. So, with the high volatility, can create high returns, and that's what's made a lot of people in West Perth and Vancouver and elsewhere a lot of money over the years. So without that, in theory, then if you can't see those sort of 10 and 20, 50 baggers out there off of an interesting discovery, then maybe the retail crowd and some of these folks that have been used to making these big bets and high risk bets on exploration, that money might dry up. However, on a fundamental basis, a company that has a good backing while private is just it allows the management team to focus on the task at hand, right, which is exploration. So you don't have to hire the big dollar PR firm, and like we said, you don't have to watch the share price and this sort of thing. The challenge is there's a potential value disconnect between that private company and being acquired versus getting a big run in the share price and then being acquired. So, I think naturally most companies are going to go public at some point. I think we're seeing a trend where, because companies were struggling so much to raise money while private, that they were naturally going public earlier to raise some tiny amount of money in an IPO round or during an RTO or whatever. But realistically, that's probably not the best path forward. We've seen some, hopefully soon to be success stories on companies that have those good backings while private. They're able to do the work. If things don't look perfect, they're able to sort of hit the pause button, reassess, get back to it, without having to worry about the market always, that the market always looking over their back. So. And then hopefully that puts them in a better position for when they ultimately do go public.
Yep. Any other thoughts on private or public?
I think from the corporate side, I think Mike's taken through more of the financial and from the funding point of view. I think the value for investors looking at a public company is often the governance that comes with it. And I think I ran a company called Alufair, and Junior, we're going through, and we went through the IPO process, and the process of going through that, in terms of putting all the systems, the processes, it forces you to put all those in place, the governance, all those things that, you always want to get round to doing, but obviously when you are moving in the direction of public, you have to have in place. And that IPO is sort of as the world went the wrong direction, so it got pulled, but it meant we had all the systems and processes in place. And so I think there's a vital element there that a lot of juniors, as you're moving forward, and if you don't have that constant requirement for that governance, you can let it slide. And that's where I think like groups like RCF or the big PE funds who are coming in, it's almost like if they have a tailored package, almost like here's your what we expect to see, this is how we want to help you. It's one of the areas where I think the funders can assist in sort of saying, here's the way we think the governance should be put in place. Here's some of the tools that we think are useful. You guys invest in 30 juniors, you've got all the other experience. You can have a good gauge on what works, what doesn't work. These are a few systems. And I think there's some guidance that could come through there that would help. This isn't about the exposure you get from the market and the pricing, but just one of the key parts about the governance that comes from having a public company. I think that would be useful also for private companies to have that help, yeah.
Got just under a minute left. Just want to quickly get your thoughts on, gold price, whether that's going to sort of trigger a bit more interest maybe in gold juniors, exploration plays, if that stays high for longer, or do you think it's not really key at the moment to bring capital into the earlier stage projects? Obviously a good thing for BT Gold at the moment.
Well, if we're funding exploration from our cash flow, more money for exploration, whether that is our own exploration or potential, cash to have investment level decisions made for juniors. I think it's a good thing all around. Yeah. It's certainly it's not a detractor. It may stimulate a little. It may stimulate more activity. I don't think it changes the quality of the activity, and what it all comes down to is those that are well financed and well put together management teams. To go back to that theme, they're going to find a way. Those teams tend to sort of endure the downturns as well. But as in a nutshell, rising gold prices certainly help.
Good. Gentlemen, unless you've got any other thoughts, that's it. I think we're at time. So thank you very much, and let's have a round of applause for our panelists.
Thanks, Adam.